afternoon, traders. This is Tony D from easyMarkets in the Sydney dealing room. A little update for you today. We've just had the Aussie unemployment numbers come out earlier, and they were a little bit disappointing. As you can see here, the market did drop off around about 30 points there. Forecast to come in around 20,000, came in at 5,000. And internally, the full-time jobs actually dropped 20,000. It was only the part-time jobs that saved us last month. Still positive, but a lot less than expected. The reason why the market hasn't really fallen further is that the Aussie dollar has been enjoying a bit of a short squeeze as tensions between US and China have died down and stocks have been quite strong. It hasn't really recovered a lot of the losses that it had experienced as that turmoil was underway, and so there is a little bit more topside room here. The 200-day moving average comes in around about 78.20. That would be an important level to be tested. And the price action is quite supportive of the fact that we've come straight back up. Was there any good news in the jobs numbers? Well, last month's was revised higher by about 20,000, so that perhaps can negate some of those losses we got this month. But really, it wasn't that negative in terms of getting the market to change direction. And if you don't change direction, it's just a matter of time before you're testing new highs in an uptrend. So that's what we're sort of experiencing at the moment. Those who are looking to sell the Aussie, you really do need to see tensions between US and China on trade resurface, or stock market weakness again to help the US dollar get strong on the safe haven bid. Otherwise, it is hard. And Aussie dollar has a default grinding higher pattern. Goes up very slowly by the stairs and then down by the elevator is a common saying for this pair. Euro dollar fairly unchanged, really muted action actually on a lot of pairs overnight. And still sitting underneath the 124 level. Pullbacks were bought though, so it's grinding higher as well. The main action yesterday was on the pound, and that came through on the weaker than expected CPI numbers. So CPI has been starting to fall in the UK as the pound's been getting stronger, and the effects of the Brexit shock from 2 years ago have faded out. So only 2 months ago, CPI numbers were 3% in the UK. The month before last, it dropped to 2.7, and then this month was expected to be 2.7. It came in at 2.5. So markets are now pricing in only a 60% chance they're going to raise rates in May. That's down from 90% only last week. So the market is a little unsure. And it's definitely a lot more unsure about the second rate hike this year in November. That's starting to get a lower pricing as well. So that's where the weakness comes from in the pound. But similar to the Australian dollar, if you don't get substantial follow through selling, the uptrend in the pound as the recovery of the UK after the Brexit shock and the new Brexit deal flows through, should lead the pound higher, especially in a weak US dollar environment, high risk on environment. The pound does well usually via the pound yen and the euro pound selling angles. So the pound, it's not down and out for sure. It's been knocked down, but let's see if we can get back up here. And the longer it stops falling, the more likely it go back to the default slow uptrend that it's been experiencing for the last few weeks. So it's a pivotal time almost for the pound. You have to really break down. I'm talking about the pound against the US now. Have to get back below that 140, 41 level. Then you can start to be a little bit more bearish. But otherwise, dip buyers are definitely out in force. So we'll see how that plays out today. And if the euro is going higher, it's going to be very hard for the pound not to go higher with it. So that US dollar weakness will end up trumping if it's a longer term theme in the market. Alright guys, come through and have a chat about your particular pair you want to. If we didn't touch on it today, a lot of crosses are in play. The Aussie Kiwi in particular is the one we focus on in this series. It's made fresh highs overnight. Now that's no surprise given that the Kiwi dollar was starting to form that bounce anyway off that 105 level that we talked about earlier in the week. And now it's up at the key resistance zone. 106.50 though is the first big level it has to get past. We'll see how that plays out in the next 24 hours.